Forget about crypto and the AI stocks by December 2026. Why? There is a big probability in March. We run a couple of different simulations with the most recent price targets and the situation that is happening either on the AI sector related to the potential adoption or pull off some of the investments. And on the crypto sides, we run some of the simulations where why there is a problem with the Crypto Act, right? And then there is a legislation between the banks and the exchanges. So when these two play out, when these two are actually found a resolution, then we might actually expect the upward trajectory. But the main problem was so far that there is no solution on the horizon. This is what the probability run, and this is what actually has to happen. First of all, the cycle, it's no longer the 4-year cycle, something that we used to see. There is no halving related looking down the future to be the main catalyst. The main problem that we're seeing over here, of course, is that the phases are coming from the inflows and the outflows. Currently, we're seeing a substantial outflows from the Bitcoin ETFs, from the investors, which essentially means that the crypto is no longer the hedge against potential volatility. Also, people are moving money off the market and they're not in the risk on assets anymore. Clarity Act progress has stagnated because a lot of the banks didn't like the idea that some of the crypto DeFi projects can offer interest, also known as yield, that it's very competitive to what banks are offering. It's even more competitive if the banks are offering 1% interest on your savings account, and some of the crypto projects can offer you 3, 4, 5, 6%. Not to mention some of the crypto projects can offer, in theory, higher yield than some of the broker accounts, right? Some of the broker accounts, the money market accounts can offer you 4.5%, right? But again, remember, broker accounts, money market fund accounts, they do not have the insurance of the FDIC. So the risk over there, of course, is greater. Same thing with the crypto. The risk over there is greater. There is no insurance. If things go south, you're going to lose everything. This is the only leverage that the banks have against all of the other players who are offering yield or offering some sort of interest on your savings or funds that you're not using on a daily basis. This is why they use this leverage to offer such a low interest. Just look at the high yield savings accounts. Even the highest, usual highest, which will be from Capital One, right? It was 4.25 when the interest rates were super high. Now the interest rates are slightly lower. And now I believe it's around 3.2, 3.4, depending of the month, depending of the day. So this is why until September 2026, there should be a move around the Clarity Act for the crypto. So there will be more understanding of, okay, will crypto projects will be allowed to actually independently offer the yield being on the actual DeFi project infrastructure, or it will be on the actual on-chain, which we might actually see. Remember, there was a big battle and hurdle for people who are staking Ethereum and receiving rewards, because this was seen as last year to Gary Gensler, the SEC chair, as Ethereum effectively being problematic for the financial system. This is no longer the case. Moving forward, you will see what about the AI sector? Why are we seeing a lot of tech stocks, most of which are actually suffering? Well, of course, Nvidia is kind of secretly, quietly pulling off all the announced investments in OpenAI. Why? A couple of things that should be noted. First of all, yesterday Anthropic announced a brand new tool that actually can create and follow and complete the process of underwriting. Also, all the legal frameworks that are currently executed by humans, on theory, according to Anthropic, could now be completely done from start to finish from the actual Anthropic tool. This is something that it comes 2 days after Amazon announced even additional 15,000 layoffs, which means that the job market will go in a very, very bad negative spiral, which will reduce, as you may have guessed, the production price index, which will most likely be related to the effectiveness of the economy and of course, the productivity growth and the wage growth, which will be decreased. And we all know what happens when the prices are increasing and the wage growth cannot keep up with inflation. People effectively are getting poorer and poorer and poorer because the prices are going higher, the wages are not going higher. Even if some wages are going higher, they're going higher because the inflation is high. So your buying power effectively goes lower even if your wage goes up. It is a very, I would say, hard to explain if you don't have economic background, but you definitely understand what I'm saying. You might get promoted, you might get some additional $100 per week or per month on your paycheck, but effectively you're not gonna feel $100 richer or wealthier simply because the prices are higher, and also a lot of people have already lost their jobs. So the main concept here will be, of course, we want to see, is the AI hype over? Are we at the end, peak, blow off top AI hype cycle? Meaning when these companies effectively later this year became public, OpenAI, right, Anthropic, and they start reporting publicly their actual revenue, you're going to be able to open the books and you're going to be able to see their returns adjusted with their expenses. We're going to see the top and bottom line, and we're going to see their estimated projections. Very importantly, when these companies become public, the whole AI infrastructure, current valuation will be changed dramatically. I want you to be ready for this. Everything that currently is hyped is under a big shadow because all these companies are private. So people are speculating and hyping how much money they're making based on the current revenue, how much money they're making based on projected corporate software, right? They're selling different tools and systems that are not available for the public. But when these companies become public, they have to disclose each and every element of their revenue sources, and they have to discuss, and they have to disclose the utility base, they have to disclose the cost basis, they have to disclose the optimization. And if we see continuing expansion of the expenses, but you don't see continued expansion or progressive growth of the actual revenue, then the market will cool off substantially. What this means? Well, in some businesses where you deal with commodity, right, the exponential growth of the user base or the clients or the business, when the business grows, sometimes you have to also grow your expenses because it requires the same amount of doubling the same business model. What am I trying to say? If you start selling from one product to 100 products, you still have to manufacture the same product. So every additional unit produced, it costs you the same exact amount. But this amount mounts over time. The only way for you to actually capitalize on this is to reduce and optimize the production costs, which is also known as economy of scale. The good thing about AI is that the software is a tool that is built once and sold to many for many times. The problem here is that a lot of these AI big infrastructure companies, they have to build unique tools on the corporate level side, on the enterprise level side. So we're going to see how much money they have. They have to have infrastructure as compute power, right? This is why X and Grok has become one of the best models, because Elon Musk had a bunch of money. He spent the most money on NVIDIA chips. He spent the most money on data centers. He spent the most money of hiring and building models and training models, which training models and training data and all this precision-oriented base performance is the most expensive part of it. It's not the chips. And the data, the accuracy and the value of the data is the most important for the model to be so accurate. This is why most likely the process will be sluggish, it will be slow, it will be broken down into each quarter of the year. So this is why, according to Grok, the estimates, the biggest development for the AI and for crypto will happen by the end in December of 2026. I understand this is unfortunate news because we're already still in February, but this is the probability game, right? This is not what a lot of people can speculate within the sector. Summer is slow for crypto, summer is slow for the stock market, summer is slow for legislation. We all know this very well. So sure, there is a probability for maybe short-term rallies in March. March tends to be a very good market for a very good month for crypto, but I would say I will be cautious.